What's up, crypto fam? Welcome back to Bitcoin Bulletin, your #1 source for all things Bitcoin. We're kicking things off with a massive warning from angel investor Jason Calacanis. He's telling everyone loud and clear: forget buying MicroStrategy stock, you need to be buying Bitcoin directly. Next up, get ready for some serious future gazing. ARK Invest, led by the brilliant Cathie Wood, has dropped their latest Big Ideas report, and their 2030 Bitcoin price prediction is absolutely wild. We're talking potentially $1.5 million per coin. We break down how they got there and what it means for the halving cycles. But wait, there's more. Who are these mysterious sharks gobbling up Bitcoin? We've got the inside scoop on how massive wallet holders have been accumulating tens of thousands of BTC, potentially driving prices higher, all while long-term holders are locking up their coins. Is a supply crunch on the horizon? And finally, the backbone of the network is stronger than ever. The Bitcoin hash rate and difficulty are hitting all-time highs, signaling robust miner activity and confidence in the network's future. Is this the precursor to another massive rally? All this and more, right here on Bitcoin Bulletin. Don't forget to smash that like button, subscribe for more, and ring that notification bell so you never miss an update. Don't buy DAT stock, buy Bitcoin, investor warns. Are you putting your money into companies that hold Bitcoin, or are you holding Bitcoin itself? Angel investor Jason Calacanis is sounding the alarm, urging investors to bypass corporate strategies and invest directly in Bitcoin. Calacanis, a well-known figure in Silicon Valley and an early supporter of tech giants like Uber, has voiced strong skepticism about MicroStrategy's aggressive Bitcoin acquisition strategy. He argues that the company, which has rebranded itself as Strategy, should trade at a discount compared to its net asset value. The reason? Its stock performance is heavily influenced by Bitcoin's price swings, potentially masking the true valuation of its core software business and introducing unnecessary corporate risk for investors. He believes that direct ownership of Bitcoin provides greater control and avoids the inherent volatility tied to a single company's massive cryptocurrency holdings. Calacanis has made his stance clear on social media, advising, "My best financial advice continues to be that you should just buy Bitcoin if you want exposure to it, and that you should stay as far away from MSTR as possible, because it's complicated, layered, and you lose control." Furthermore, Calacanis suggests that Michael Saylor's prominent Bitcoin accumulation, while popular among some crypto enthusiasts, could inadvertently harm Bitcoin's broader market perception. He warns that concentrating such a significant portion of the cryptocurrency within one public entity might distort market dynamics and foster a narrative of centralized control, which runs counter to Bitcoin's foundational ethos of decentralization. MicroStrategy has committed billions to Bitcoin since 2020, establishing itself as the largest publicly traded holder. While this bold move has captured the attention of both institutional and retail investors, it has also made the company susceptible to sharp market fluctuations. Critics like Calacanis contend that MicroStrategy's share price now more closely mirrors Bitcoin's volatility than the performance of its underlying software operations, leaving shareholders exposed. Hold on, because the future of Bitcoin might be even more mind-blowing than you think. Next, we dive into a jaw-dropping prediction that could see Bitcoin reach stratospheric heights by 2030. Will Bitcoin hit $458K by 2030? Expert analysis of halving cycles impact. What if one Bitcoin could be worth over $1 million by the end of the decade? That's not science fiction. It's the astonishing forecast from Cathie Wood's ARK Invest, and it's got the financial world buzzing. ARK Invest's latest Big Ideas report outlines a bold vision for Bitcoin's future, projecting a staggering $1.5 million per coin by 2030 in their most optimistic scenario. Even their more moderate case sits at $710,000, with a worst case still landing at an impressive $300,000. This ambitious outlook hinges on several key factors: accelerating adoption by both individuals and institutions, governments refraining from imposing restrictive regulations, and the continued global embrace of Bitcoin as a hedge against inflation and currency devaluation. The report also emphasizes the critical role of technological advancements, like the Lightning Network, in enabling Bitcoin to handle global-scale transactions efficiently. The historical impact of Bitcoin's halving events, where the supply of new coins is cut in half every 4 years, is also a central theme. Past halvings have consistently preceded significant bull runs, though the magnitude of these gains has decreased with each cycle. From a 9,500% surge after the 2012 halving to 2,900% in 2016 and 700% following the 2020 event. The recent April 2024 halving has shown a different pattern, with Bitcoin already reaching record highs pre-event and a more choppy market afterward. This has led to debate about whether diminishing returns are inevitable as the market grows, or if new factors like the introduction of spot Bitcoin ETFs and global macroeconomic forces will rewrite the playbook. However, the path to these lofty predictions is not without its obstacles. The report acknowledges potential risks, including technical vulnerabilities, environmental concerns surrounding Bitcoin's energy consumption, and the ever-present threat of unforeseen black swan events. A crisis of confidence in stablecoins, exploits in decentralized finance, or the eventual impact of quantum computing on encryption could all pose significant challenges. Despite these hurdles, the ongoing development of Layer 2 solutions and sidechains is expanding Bitcoin's capabilities, transforming it into a more versatile financial network. Could these sharks be the key to unlocking Bitcoin's next major price surge? Get ready, because we're diving into the on-chain data that's revealing a massive accumulation by large investors. Did sharks push Bitcoin above $115K in 2 weeks? Is a secret group of Bitcoin whales quietly orchestrating the market's next big move? Recent data suggests that large investors, dubbed sharks, have been on a massive buying spree. In just the past week, these shark wallets, typically holding between 100 and 1,000 BTC, have accumulated an astonishing 65,000 BTC. This aggressive buying has pushed their total holdings to an all-time high of 3.65 million BTC. According to CryptoQuant analyst XWIN Research Japan, this accumulation is happening simultaneously with a growing supply crunch, evidenced by positive net position changes from long-term holders and consistent outflows from exchanges. This indicates that investors are not just holding, but actively withdrawing Bitcoin from trading platforms and moving it into secure cold storage, signaling a long-term conviction. While XWIN Research Japan notes that short-term corrections are possible, especially if derivatives leverage becomes overheated, the underlying foundation for a significant rally appears to be solidifying. The actions of these large holders, combined with long-term investors securing their positions, suggest a potential setup for a substantial upward price movement. The market is currently experiencing volatility, but beneath the surface, a supply squeeze might be building. But is the network itself ready for this potential surge in demand? We're breaking down the latest record-breaking metrics for Bitcoin's hash rate and mining difficulty. Bitcoin hash rate difficulty hit record highs as miner supply spikes. What does it mean when the very engine of the Bitcoin network hits peak performance? The signs are pointing towards a bullish future. The Bitcoin network's hash rate, a measure of its total computational power, has surged to an all-time high of 1.12 billion THS. Alongside this, the network's mining difficulty, the challenge miners face in validating transactions and creating new blocks, has also reached a record high of 136.04 T. This simultaneous surge indicates immense confidence and activity from miners worldwide, who are investing heavily in processing power to secure the network. This heightened activity is particularly significant following Bitcoin's recent price surge and record inflows into U.S. spot Bitcoin ETFs. Experts like Varun Satyam, co-founder of Davos Protocol, suggest that such periods often lead to smaller, less efficient miners scaling back, while larger, more efficient operators consolidate their position, anticipating future price rallies to recoup their capital expenditures. Furthermore, miners' reserves have bounced to a 50-day high, indicating they are holding onto their mined Bitcoin rather than selling, a strong bullish signal. Historically, Post-halving hash rate surges have preceded significant price rallies. With easing selling pressure from miners and a favorable macroeconomic backdrop, including anticipation of a Federal Reserve rate cut, the network's robust performance suggests Bitcoin is primed for a decisive upward move, potentially pulling altcoins along with it. So, what's the final verdict on Bitcoin's trajectory? Stick around for our lightning round recap and the full call to action. And that's a wrap on today's Bitcoin Bulletin. We heard Jason Calacanis warn investors to buy Bitcoin directly, not MicroStrategy stock. ARK Invest dropped a bombshell prediction of Bitcoin reaching $1.5 million by 2030, driven by halving cycles. We saw mysterious sharks accumulating massive amounts of BTC, potentially signaling a supply crunch. And the Bitcoin network's hash rate and difficulty hit all-time highs, pointing to miner confidence and a potential rally. Don't miss out on the next big crypto moves. Make sure you're subscribed to Bitcoin Bulletin, hit that notification bell, smash the like button, and let us know your thoughts in the comments below. Follow us on all social platforms for real-time updates.